Good morning. Thanks for your company this Friday, the 25th of September. I'm Jessica Amir, a market analyst with Bell Direct. Well, earlier this week, US existing home sales grew to their highest level in 14 years, and overnight we learnt new home sales got a 4.8% kick, an unexpected rise supported by record low interest rates. However, overnight, damper employment data came out. US jobless claims rose more than expected over the week. Now, this is quite reflective, showing the divide between the haves and have-nots is increasing, given home sales are tearing higher while unemployment is elevated, particularly in hospitality and retail. Now, this ebb and flow of economic news is causing markets to be volatile, pepper in the fact that the US election is just 49 days away and European COVID-19 cases are on the up. So it's easy to see why the volatility index is spiking as measured by the VIX. But as always, with increased volatility comes opportunity, and this is perhaps why we saw overnight US equities rally after they were snapped up with investors buying low-hanging fruit. Apple and Microsoft shares ended over 1% higher. Restaurant brands Darden up the most in the S&P 500, up 8%, and Goldman Sachs followed, lifting 5%. As for the major indices, the Nasdaq up 0.4%, the S&P 500 following 0.3% higher, and the Dow up the least 0.2%. And given the risk-on sentiment has returned, we saw the US dollar sold down, seeing the USD fall from an almost 2-month high. On the commodity side of things, that slightly helped the oil price, and the oil price rose back above $40.30 US a barrel. Gold, however, lost a touch of shine, losing 0.2%. It's now at 1,873 US an ounce. Or to watch today, well, the Aussie market is eyeing a slight gain of 0.12%. That was according to the futures earlier, but it might be worth keeping an eye on the banks over the next several weeks, given the Federal Treasurer is planning to scrap responsible lending laws in a bid to encourage loan growth or to boost the economy. Now, this is quite noteworthy because the Rudd Labor government introduced these laws following the subprime loan crisis in America that fueled the GFC. As for trading ideas that may be worth a look, Brickworks BKW reiterated as a Citi buy, a higher price target now, $20.95, with Citi being quite bullish on the rise of industrial property demand given the shift to e-commerce. However, a word of caution, we haven't really seen home builder demand pick up despite the stimulus, and given that we haven't seen this pick up, it's something to consider given New South Wales and Victoria for Brickworks make up 65% of their overall sales. Nevertheless, BKW was reiterated as a Citi buy. UBS also reiterated Brickworks as a buy given its financial results handed down yesterday were mainly in line with expectations. Elsewhere, one of the best performing gold stocks on the ASX, De Grey Mining DEJ, was downgraded by Bell Potter from a speculative buy to a hold with a 153 target. That implies about 14% upside from yesterday's close. Now, the gold miner has got a new gold discovery in WA, and its drilling results have found 4 zones almost immediately adjacent to one another, have potential to supply large-scale baseload ore into a large processing plant. Elsewhere, keep an eye on 2 stocks today: cyber security company Tesseract TNT and software management business IntelliHR, as they're giving off strong bullish charting signals according to Trading Central. I'm Jessica Amir with Bell Direct. Stay safe, happy trading, and I'll see you for the weekly wrap.